As we look ahead to the year and perhaps years to come, how bad are things likely to get in the housing market?
Yeah, well, first, thanks for having me. Appreciate the invitation. The news this morning wasn't good, right? Starts were down, but I would point even more to the fact that permits were down 11%, even more so on the multifamily side than the single family side. But clearly, builders responding to the lack of demand, the lack of traffic they're seeing. Buyers have had to face up to the fact that mortgage rates are more than double where we were at the beginning of this year. And many of them, in combination with the still very high level of home prices, really facing sticker shock. So not surprising that buyers have pulled back, and now not surprising that builders are reducing their pace of construction in response. We're forecasting another 9% drop in single-family housing starts for 2023.
When does the tide start to turn? If you're looking at the worst of the indicators that is making it so hard for home buyers and home builders, what are the things that will start to ease those pressures the most?
Yeah. It's interesting. Over the past couple of weeks, we've seen mortgage rates down as much as about 75 basis points. Obviously, to your earlier conversation today is an exception where we're up another 10 basis points or so with the 10-year. But I think that move from 30-year mortgage rates above 7% to down to 6.25% or so, that's going to be impactful. We're kind of at the wrong time of year for it. This is the absolute slowest seasonal portion of the year for home buying. If we can keep rates 6, maybe a little bit below 6 as we get into the first quarter of next year, when we're at the beginning of the spring buying season, that's really going to be impactful. A lot of the folks that stepped away from the market in 2022 in May and June because of that sticker shock and stayed away through the fall, they still need to live somewhere. They're still seeing their rent increase. So I'm not going to be surprised if the market shifts a bit more towards sort of the first-time home buyer segment, because, again, a lot of the folks that would have planned to have bought last year put it off given the spike in rates.
Yeah.
If we get just a little bit of relief in mortgage rates, they could come back.
Yeah, as a prospective first-time home buyer, eventually, hopefully in the future, who has been spending way too much money on rent for way too long, I am definitely waiting for my entry point. But on the subject of those prices that have been putting people off, Tom Lawler, who is a former economist at Fannie Mae, predicted the housing bubble popping about 15 years ago, says he expects that prices will fall up to 12% over the next 2 years. What is your expectation on the trajectory of prices?
Yeah. So again, think about the context. Last year, by the FHFA measure, we were up almost 19% year on year. As of third quarter of this year, we're still up 12%, but we have seen some monthly price declines. We think by the end of 2023, that national home price measure will be showing a negative year on year, but a small single digit, call it 1, maybe 2% down. The reason that we're more optimistic than Tom, and Tom's a former colleague, is many existing homeowners just don't have to sell. On the builder side, they want to move those units, so they're a little bit more willing to concede on price to move the transaction forward. A lot of sellers, you're seeing them pull listings from the market right now in the face of the weakness. So we think transaction volume is going to fall quite a bit next year, maybe another 12% on the existing side, because you'll see those current owners just less willing to take a loss on the property. And there's just no distress in the market right now. Our data, our national delinquency survey, show that the mortgage delinquency rate is the lowest it's been going in the more than 40 years that we've collected the data. So back to 1979. The unemployment rate's so low. We've had so many years of strong housing market. There's there's almost $30 trillion worth of homeowner equity in the aggregate. Owners aren't going to sell if they don't have to.